Yo, welcome to Org Plus. Hi, hi. Hi, 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 hi. Hey, what's up? Hello. Welcome to Org Plus, where I'm learning how to day trade. I think I'm doing pretty well at learning it. We made a couple mistakes along the way, and as a result, we are negative at the moment. That much right there. We are negative that much. My goal at the moment is to attempt to get that back into the positive, and as a result of that being back in the positive, go 3 months without not losing, but without failing to come out profitable. We're starting from a pretty rough patch. Version. Yeah, we'll restart that to apply updates. Huh? Uh huh. Cool. Gold. That's been updated. Yeah. So we are very, very early to the ball today. I'm starting recording at 6:30 a.m. instead of my usual 7 a.m. thing. That is primarily because I have had such a hard time trying to nail down how I want to wake up and really combat the markets. And I think I have managed to discover with myself the best time for me to go to sleep and wake up for reasonable decision making without feeling so groggy as to make bad decisions, right? Or feeling so tired I just can't make the decision without going to sleep and giving my mind a break for the day. So I figured, okay, I'm going to play with it. I'm going to experiment. I'm going to see what I can do with myself without breaking myself along the way. I needed to figure out exactly how I intended to master myself in this specifically in this area. That being the case, let's get into it, shall we? This is Trade Locker. Let's start with news, just to get that nice and understood. We have double red folder today, semi high impact news. It's not any of the folders we cannot trade, right? So, regardless of these two being red, yes, they're red, they're high impact, but they are not the FOMC. They're not NFP, they're not PPI, and they're not CPI. Unlike last week, Wednesday and Thursday, I think we had PPI and CPI back to back. Couldn't trade either of those days. Bad week to trade all the way around. So we stayed out that week. I think we traded maybe twice, and we won one trade and lost another. Yeah, my luck has been in the dumps recently, so I'm taking my time to learn. We have double red though. We have 1, 2 increase if actual is greater than forecast. Good for currency. This is up, so if it continues into the green, we should see price continue higher. This one is a decrease. Forecast is greater than, or sorry, if actual is greater than forecast, it's good for currency. So if this is green over negative 0.05, negative 0.5, sorry, we should see price continue higher. But if it's lesser, it'll continue lower. Both these folders will hit at 8:30. Something tells me they'll result on the exact same candle, so we'll see it pop up at 8:30. Um, those two are the only really major folders we have to look at when it comes to market. Tomorrow, Wednesday, we will not be trading because we have a triple. When I say triple, we have 5 red folders, and 3 of them are FOMC. Major no-no. We stay away from these days. FOMC is a no-no day. We don't trade there. Did I just say a CPI? I did. GBP. There's a CPI on that day as well. Ouch. USD bank holiday. Can't trade on Thursday. Sorry. What in the world? There's a bank holiday? Juneteenth National. Huh? Independence Day is July 4th. What the heck? I don't know about that one. Weird. Either way, because of the bank holiday, we can't trade Thursday. Friday, on the other hand, nothing major. So we'll see what we can do later on. That being the case, we're going to take a look at here now. We're currently in London session. Nothing too big by Ed just with that one just yet. We're going to go ahead and mark off 9:50 and 10:30, so that way we have our window of hay right here is where we want to pay attention. That is our 8 o'clock mark. We're going to move back up into the 1 hour setup. Boom. So I noticed something earlier. I mentioned on live stream from Orb's Vault. If you haven't been watching that kind of content, I said it towards the end. Did I say it towards the end? I don't know. I can't remember when I said it. I noted that I had seen a YouTube video, a short, that depicted a strategy that seemed kind of reasonable to execute, right? This guy, what he did was he identified a trend, right? And his method of thought was on a large time frame, because that's the best way to look at it. You want to find the lowest candle within trend, right? And then you want to identify the highest candle, and the highest wick on the lowest candle and the lowest wick on the highest candle within this move needs to be marked, and let the two of them sit at ranges, kind of like fair value gaps, right? And if they're respected, expect a retrace back up in continuation. But if they're disrespected, expect them to continue on down. Very basic, very bare bones, but I want to give it a try because the way they executed it seems so seamless. And I know 9 times out of 10, this kind of chart right here is not going to give me a solid dry and cut. Ooh, look, you can see a trend here and it works fine. Especially when you have stuff like this right here where your wicks are going way up beyond this, and it's just, in general, very difficult to read. However, I think I know enough to identify a trend and when trend ends, and what markers to look at when trend is in a reversal, right? So what I want to do is attempt to use that as a key level and cross-reference it with the TJR strat, so that way I have a double point of entry that I can solidly say, if this key level is hit and it's not just a high or a low, but a range that was respected, it's no longer a guessing game of, okay, it has to absolutely hit this low for it to be considered a hit. Instead, it gives me a range. And from that, if it's respected, I can assume, okay, trade is gold. Let's go ahead and find the rest of the confluences of the TGR trade and go from there. And in the event something doesn't go the way it's supposed to, the end result of it will be on a small time frame. I will be able to see that retrace back down before it goes south all the way. There's also a node that was just added on TradeLocker, if I'm not mistaken, called break even. There's a button somewhere during trade that I'm supposed to be able to press, and it will move the stop loss and take profit to my point of entry, to where when price comes up, and or if price is below, it will continue the trade until price has rebound up into what we put into market, and we will break even completely. So we will get all of what we got put in the market, and the end result will be we will have lost nothing. Though the trade idea is wrong and we will have learned from it, the general thought is to save ourselves the loss by breaking even. Sounds good on paper. I don't know how it's going to work out if I attempt to try it. The idea seems simple enough. Let's see what happens. Let's go ahead and hit over here. We are on the hourly for NASDAQ and the S&P 500. We're going to go ahead and do this right here. Mark out the NASDAQ, get that situated first. Because I hate the fact that we were losing. I hate the fact that we lost as much as we did way back when. So here is our Asian session low. Highest point in Asian session was right here. How you identify a high? Up, down. That is incorrect. Up, down. Highest point was like right there. Boom. Boom. Good. London session. Down. We have not created a low of London session except for this right here. We're going to mark that. Plain and simple. Highest point of London session is right here. Cool. This low past this one. So at the moment, we don't care about that. We have our highs, we have our low. This is our current price range that we're looking at. The goal is the lowest low before this candle here. This pattern here that identified this high. In this downtrend, we want to find the lowest pair of candles and take everything from the top down. And I think because it cut it so weird, right? This is what I was talking about before about being very hard to read, because this is obviously a downtrend at the moment. We have not broke structure above a high. Up, down. Actually, no, we broke structure here, but the general trend is down. We continued on down. We've broke structure again, right, and closed below, or are about to close below this low here. In continuation, the price is going to go lower. The trend's easy to read, but the strategy I want to apply per the candlestick ranges, right, for key levels, isn't lined up. It's not there. So I can't really say, ooh, let's do this, or ooh, let's do that, because I'm more than likely going to be wrong about it. Are there any key levels outside of this that I can look at? Yeah, actually, there's a fair value gap right here. Actually, this was an inverse fair value gap because we closed and inverted this here. Boom. So let's see exactly what happened. Because we have an inverse fair value gap. Did we have a break of structure? No, we didn't. For the general trend right here. The only structure breakage we had is right here. We broke below this low here specifically, right? And the result was prices continuing lower. However, we have a low right here that we can mark out. Price might want to move all the way down there. Current trend at the moment is down based on this move specifically. But looking at higher time frame, something tells me this is one massive green candle and this right here is one massive red candle. So opposing moves in a setup. We have a draw on liquidity way up there, as well as right here we could take. And of course we'd have a candle like this right here, next to impossible to read, down, up, lowest point, boom there. Price could want to go all the way down there. Not saying it will, but that there is a potential for it too. And this is on the hourly time frame, just so we're on the same page. We are not within our time to take a trade, so we have all the time in the world to take this lovely line here and move it to where we want it. This is just to mark the general range for price to move after the open of New York Stock Exchange. The high outside of London, or out of Asian session, outside of today's sessions, it's right here. This is the most recent high, aside from current price range and session highs and lows. Let's go ahead and mark out the exact same thing on S&P 500. Go ahead and get that taken care of. Good. Good. Is this lower? No. Good. This is the highest point of Asian session, and the low was passed underneath by this, so we don't care about that. Highest point in London session is right here. We're going to leave that the way it is there. Good. Highest point outside of Asian session is this right here. Cool. We're going to mark some lows throughout this to go ahead and get that understood. Nice and good. Not yesterday. Was it yesterday? No, yesterday wasn't super news heavy. This was yesterday's price action. As you see, we moved it straight up. There wasn't really much news. We're on Tuesday, by the way. This is Tuesday. This is Monday. This is Monday, Sunday going into Monday. All of this right here, I did not like the way it was moving. So I'm like, okay, I took the liberty to go ahead and say, I'm not going to trade today on Monday because this to me made no sense. And then all of this move up, I would have made a mistake somewhere. I would have made a boo-boo based on this move here. That would have been legit me. That would have been a bad day for me to trade. So I chose to sleep, get my bearings. Now we're here. Let's go ahead and get these lows marked, shall we? Cool. Down, up. This is a low. This is a low. Down, up. Lowest point between the two. Boom. That is a low. Potential draw on liquidity there. Down, up. Is this lower? It is, but by barely. There's relative equal lows. I think price is going to be drawn to this before it will be this. It might come down into this, but I'm not going to hold my breath. This right here is going to be the money shot, I think. Money shot, I think. I do believe this is where price is going to want to go for the day. And then it'll probably rebound and continue higher based on previous price action. Every time it's dipped, it continues higher. Dip, continue higher. Let's see what the week has for us. We are on the highest time frame I'm willing to go as in an uptrend. That's per the daily. On the weekly, sorry. Per the weekly, we're in an uptrend. On the daily, looks like we are currently in a downtrend because we just down, up, boom, lowest point, boom, break of structure, closure below it, right? And we had a high that did not break above the most recent high I made there, making this a break of structure. Cool, on the high time frame. When a break of structure occurs, that is our reversal sign that this is about to end and we are about to move down. How far down? Don't know. However, on the daily, we could see that plain and simple. Let's go ahead and inspect NASDAQ, make sure it's saying the same stuff. Looks like it. Weekly says uptrend, though we are currently arching up there. We have got a bunch of candles clustering around a peak right there. And then we go to the daily. Boom. We have down, up. There's our low. Closure below the low from this uptrend. Break of structure here. Closure on the high. Did not get above this most recent high. Confirmed break of structure. We should see price continue moving down. I'm expecting a short position based on this price action specifically today. On the hourly, can we see the same thing? I mean, kinda right here, right? We had a low and a high, right? And then we broke structure here on this low. We closed below this most recent low. We had relative equal lows, actually. And from that, price dipped. And yeah, that's our break of structure there. We tried to move up higher, couldn't get a closure above the most recent high on the higher time frame. And as a result, price is barreling back down. We should see price continue to move down. And I think it's going to target this general region here. From that, same story on NASDAQ. Break of structure, retrace, couldn't close above the most recent high here or here. As a result, actually, yeah, it didn't close above this. So as a result of this failed retrace, we should see price continue to go lower. How low? I'm still thinking roughly in here. If we're lucky, because I know there are different levels. I know they are. This right here might. be hit. I actually marked that one on that one as well. So we're lucky if this gets hit, but if this right here is hit, then our trade idea is correct. Okay. I think that's fair. We still have a decent bit of time. We have an hour before we really got to consider our moves very carefully. So that being said, I want to really dial in and look at the hourly. Okay, nice and good. This is a 10-minute delay chart too, so we're going to be extra careful when making a decision. We're going to make decisions based off of live price action, not this price action right here. So we'll be manipulating this chart more often than not. We're on the daily here as well. We can see that break of structure here. Closure didn't get up above the high. Genuine break of structure. We can even move on to the weekly over here and see the same thing. We're in an uptrend, but again, cluster of candles here, about to be on a retrace. No biggie. Daily, break of structure there. From there, we move on to the hourly. We say price is going to move lower. Same story, break of structure, retrace, did not close above highs. We see move down, which is currently what we're seeing. I mean, that's pretty well defined downtrend right here per the hourly for today. Do I want to see price continue moving lower? Yes. However, at the same time, I want to see lows swept. And if they can be swept completely, that's going to give me bias that price is going to want to actually continue higher, because after it swept that, where's it got to go? Up. From there, we continue higher. We're going to do the same thing we did on the TradingView app. We're going to mark some lows off of this here because I have yet to do so. So we have our stop loss and our take profits pretty much set up. High outside of this is right here. Cool. Cool. Yeet. I don't think I did a very good job at marking this, so I'm going to do a little bit better. We have high there. Cool. Down, up. Lowest point between the two is right there. We have our price range. Cool. This is our price range for current price action. We want to see price give us the mode needed that is going to move on down. That's what we want to see happen. That's what we want to see occur from that notion. I think I'm going to pause the video now, and I'm going to wait patiently for the time to pass. So when we go into market for when it's actually open, we have a clear shot, an understanding of what the idea is, how we think it's going to go out, and how it's going to play from there. Fun stuff. We'll be right back momentarily. So I'm learning a lot, and the day hadn't even hardly started for me. So, stuff, right? Stuff. Not very good at explaining things that I'm just new to. Not gonna pretend I hardly know them. Apparently, I've had my timer set up incorrectly. So 8 a.m. is apparently pre-market for New York Stock Exchange. 9:30 is when it really opens up, and where we ought to look for major moves in the market. So I moved the line over on both TradingView and TradeLocker. So now when we move on to the 5-minute, we'll see there is a well-defined 9:30, 9:50, and 10:30 for the hard stop. And of course, entry on that note. Stuff that I'm trying to look at. What kind of stuff am I after exactly? I'm after a trade. We have relative equal lows here. We have relative equal lows here. What does this tell me? I think price is going to go low, sweep these, and continue higher. Does the day say the same thing? Low here. Relative equal lows right there. Price might want to go lower, sweep, and then move higher. That's on a daily time frame confluence. The highs aren't really relatively equal, nowhere near as equal as these two are here. Outside of that, I mean, this is pretty wide range for it to be doing that stuff in. I imagine it'll come down, sweep this, and potentially even target this low, maybe even this low. So we're kind of looking for that. We did get a break of structure here on this, though. Higher high, higher low. Boom. What's a break of structure in an uptrend? Closure below a low. Down, up, lowest point, closure, up. We'll need this to come down. That's not a problem to spot. On the daily, on the hourly, sorry, not the daily. I don't know why I keep bouncing back and forth. Time's not like that at all. We have relative equal highs. No, we have trend line highs though throughout this. What do I think is going to happen? I think on the hourly specifically, what I think is going to happen is price is going to come up, sweep these relative highs here. It's going to sweep it, maybe even close the survive gap a little bit, wick up into it. From that, we'll be looking for an entry coming back down because the lows here, these sets of lows, this one, and this set of lows here is relatively the same. So we'll be looking for a reaction off of this trend line that has formed here. Is it the same story over here? We have no relative lows here on this side, but over here we kind of do. Down, up, low here, down, up, low here. Relative lows, I think it'll come up, sweep this, and then barrel on down, potentially targeting this one, potentially all the way even down here. We even have relative equal lows down here with down, up, boom, relative lows there that I could target that it wants to come down and sweep. So we're looking for a short on this, which is in line with our bias. We saw the break of structure on the daily here, and it's got plenty of room to target throughout this. So that's a potential. And just on the same page, we can look for this one here. Yeah, relative lows there. And then triple relative low right there. We have this one, and this one, all relative to each other. And we could see it. I don't know. Should we consider that a price move down worthy? Swap of all those lows and then it pushing higher? Because remember what I said there's a bunch of relative highs within this that it could come up, sweep above these two, and then push lower to really sweep down all these lows and then continue on down to get all this. Well, we're going to pay attention quite carefully on this one. We also have to remember at 8:30 we'll have news come in and start wreaking havoc, so I want to keep that in mind. We'll be trading roughly around 9-ish, 9:30. Want to get the market open before we really start making decisions on where price is going to want to go. Looks like after this video is done and posted, I'll be seeing you guys Friday regardless, just because Wednesday is FOMC, Thursday is holiday, Friday's my only other day this week to trade. So if I don't post Friday, chances are it'll be because market is just too volatile and I can't really get a good read on it. Aside from that, I'll be streaming. So if you're not interested in this kind of content, feel free to check out Orbs Vault. You can find that by literally typing in at Orbs Vault on YouTube search bar. And if you don't want to really type in the search bar, there's a link to the Twitch. It has the lives I stream. Twitch is only for lives. And then if you want to see the past lives I've hosted, be sure to check out Orbs Vault. That link can be found in the Twitch page description. It'll be that YouTube icon. You just click on it and it'll redirect you back to YouTube. So that's the thing. Case. Aw, poor baby. He just woke up. He had a good nap, it sounds like. So we can't count those as lows, but we can count these three here. These some lows right here. We can count those. We have a double trend line set up. I'm gonna pause the video and see what happens. BRB. Okay, so we are currently looking at news. About to drop in 8 minutes there. It's currently 8:22. That being the case, we have this right here occurring. Yeah, keep this right there. Keep that nice and simple because I don't want this to be messed up because this is still London session. I'd like to get the best trade possible today. We have a fair value gap right here. I'm now noticing. That's 8 o'clock right there. At this point, we would have probably went down to here because we hit our key level there on the high from London session. From here, we would probably be looking for what? Break of structure, inverse value gap, right? So from here on this candle, we'll be looking for a break of structure, a closure above it, boom. Let's say price wants to continue, confirm higher, right? And then from this, we want to look for the reverse. So breaker block, order block, price to come back within equilibrium. However, at the same time, now that I've moved this over, it's actually given me a little bit more space to really dial in specific key levels, right? Because now there is more of a defined, okay, if this moves higher, it's cool. If this moves lower, it's cool. 930 is where I want to really look for the massive leap, the sweep that I'm after. So that way the reaction from said sweep is as simple as, okay, this is where I'm looking for everything needed. Exit or execute here. Wait for it to do its thing. Come back up. Boom, we're gold. And it works out in the long run. I get. I think you guys can. No, you can't even see it because still looking at news about to drop. Gosh. How about this? I'm gonna pause and save the 5 minutes because you're gonna see this regardless. BRB. Okay. We have both being lower on this note here. If greater than forecast, good for currency. If it were green, it's going up. If greater than forecast, good for currency, it's lesser. Both are in the red, both are less. So we should see price move down. We dropped to 830, price moved down. We can see a big orange red candle right there stating that, yep, we are in fact in a down mode. So that works. News hit, yay. We want to wait a little bit till about 9 when it starts to really take effect. So what's happening? I still think price is going to do one of two things. It's got to go up or low, and it's got to sweep the collection of this entire trend line here. And what's going to happen is it's actually going to reverse off of that. We want to catch the reverse. It's not very nice at the moment, price action. Because unlike this right here, where it's a smooth line down, you have a little bit of turbulence here, and it just continues up higher through there with minimal. This choppiness right here is just not fun to look at. Very hard to read, very, very volatile. I don't think news had a major impact on it. What do I think is going to happen? What are my key levels? I'm looking at two sets of liquidity. I'm looking at relative equal lows across these two here, which are draws. I see this right here being a sweep of these two lows and confirmation of said sweep. So if I'm right in this, price is going to want to continue higher from this move, from this confirmation sweep here. It'll continue higher, sweep up above this high here. And what we want to see is the reaction. We want to see it come up above, but not so high. Like it'll clear this high here and a little bit beyond, but it won't continue up past this. Instead, we want it to taper off at the top, and we want to see a retrace follow, right? From that retrace, we'd be looking for a break of structure on the 5-minute, and then from that, the continuation fall into the downtrend that we're currently in. Technically, right now, we are in a downtrend. We had a break of structure here until we had a break of structure here. Remember, in a downtrend, because down, up, closure, downtrend, right? The break of structure what we'd be looking for is a high that closes above a previous high. Up, down, high, boom, up, down, high, boom, closure above this high. This is an uptrend. But that's until we close on our previous low. Down, up, low, boom, closure, boom, below a low. That right there is our break of structure. We are now in a downtrend. We haven't had. Oh, no. Did we? We did. I think. Very small break of structure back to the upside. So we're now in an uptrend. The trade idea at the moment is correct. We broke structure out of this down. It'll come up, sweep, push lower, I think. I think that's the idea we're wanting to go for. I'm not going to mark anything on the NASDAQ on a trade locker just because it is pretty much going to tell us the exact same thing this is telling us over here. We don't want to move this anymore because our very next candle will be market open. Almost. I'll wait for that. I'm not going to lie. At the very moment, right? At this exact moment, I watched a video on liquidity, right? The three forms, as well as the fourth ish form of liquidity and how it presents itself, how to identify it, and of course, he went over the time as market opens, right? He went over Asian, London, and New York Stock Exchange. Up until this point, I thought, based on the boot camp I watched, that market open for New York Stock Exchange was 8. And I've been sticking with that for a while now, right? And for the most part, it worked. However, I'm starting to realize my mistake in strategy, right? And so I chose to just now correct that mistake. That's why I moved it over. You're not seeing any more triple lines here. You're seeing double instead of triple. The goal, the hope is that because I've moved that line over, I'll have a better view of highs and lows in London session. That's my personal thought process, nothing having to do with the video. My thought process is, so long as that line is moved over, I have a better view of London session. From London session, we'll see 9:30, 9 o'clock open, and we'll see new players come into the market and move it through their entries and exits, and of course market manipulators, because we want to see movement occur. And then from that move on the open candle, right, we want to see a reaction from that, showing us price moving in the direction we want it to. Right now, every single move up to this point has been pointed in a downtrend direction, right? And we just broke out of the downtrend back into an uptrend on the hourly. I want to know before I really dial in on an execution for this trade. I want to see the reaction that, one, we get a sweep, and two, we get the retrace needed. And I want to see it fall in line with the same fashion TJR, demonstrated in his liquidity video. Because I feel as though when we get to seeing that retrace, we're going to be ready for when the confluences present themselves. We want to see it sweep and clear, so it's got to close above this line here, right? We want it to taper off. We don't want it to break structure above it. We want to see it taper off. We want to see price continue low, break structure back below this line, right? Because that'll be our confluence on the 5-minute that, yes, we had a sweep, confirmed break of structure. We'll see a fair value gap or something form that brings it back down. And then from there, we'll have the opportunity to identify break of structure or fair value gap. On the 1-minute, that'll give us optimal entry for the continuation. We want to see it happen. I'm going to pause the video until I can really see and identify a liquidity sweep that I'm happy with. I might not even pause it until after we identify the beginnings of that retrace, to be completely honest, because I want to see the sweep occur. I want this trade to run as smooth as possible. There is a likelihood, I'm not going to lie, I'm not going to shy away from it, I'm going to face it head on. There is a likelihood today that I might not trade, simply because, one, I'm doing something new. Two, I'm implementing 2 things now instead of 1. That being the high and low candle method I was describing to you guys earlier at the start of this video, as well as the change time. And now, with a better understanding of liquidity, a different, not different, but a more refined look at what liquidity sweeps are, how to identify them, and looking at this chart, how to predict them accurately. My goal is to predict them accurately enough. That is the job. And then from there, find a reaction that I can then make profit off of. After that, it's just a matter of getting the hang of that consistency in identifying it, executing it, rinse and repeat. I'm going to pause the video. We'll go over what happens when it happens. And if I'm late to the ball game, that's okay. I'll just stop what I'm doing after the fact, come back, explain everything, and that'll be the video. BRB. The longer I wait in this, the more my gut feeling is telling me not to take a trade today. I'm on the 5 minute, right? And I see these two. These two are relative equal lows. Super strong draw on liquidity here, and they're within session, right? My thought process is we had a low here that was relative equal to these lows over here. This would have been our super strong draw on liquidity. Well, price came down, checked it, and went higher. It rallied. Okay, cool. Now that it's rallied, I'm looking for the retrace back down, right? Because this fueled all the orders needed to go higher. It did that. Price then swept these highs here. These were relative equal highs, right? Up, down, boom, highest point. Up, down, boom, highest point. There. Relative equal highs. Got swept. Cool. We see the arch, the cluster of candles that say, hey, we don't want to go higher. Okay, cool. We swept it. Highest point here. We'll treat that like a liquidity sweep because it is above these highs. And it doesn't really reverse the fair value gap we had right here. You can see that on the 1 hour here. We went all the way up and there is no fair value gap within this at all. It swept the highs. We got a break of structure here. It closed below this low here. Okay, cool. Our next setup would be for a fair value gap, break of block, order block, for price to become within equilibrium. Well, we had break of structure here, and our retrace was here. For a downtrend, that makes sense. It wouldn't be a breaker block or an order block, so it would be waiting for price to come back within equilibrium. It stayed within equilibrium here. It came up and stayed between this and the most recent low made. We had, boom, price within equilibrium. From that to be a thing, we would have gone down to the 1 minute. And then from this 1 minute counter here, because this was our high, break of structure, price came back up, stayed within equilibrium, and then plummeted. We would have waited for, on the 1 minute, a break of structure confluence out of, because this was a retrace, right? That created a relative third high on this notion here. I think it would have been this right here. That would have been our confirmed break of structure. Though, because I don't think we can actually count that because it's still within equilibrium. We have a high here, low here, right? This was our range, and equilibrium would have been within this, so we can't count this. We would have needed to wait for down here for this candle here to really, well, not just this candle, but down up would have been this candle right here ish. This candle would have been a well-defined break of structure out of this, move up, and then from there we've seen it continue down. But at the same time, and the primary reason why I'm struggling right now is because I'm looking for a reaction, a strong reaction on the 1 hour that says, yes, we are 1000% going to be moving in one direction or another. Right now, as I'm speaking, I am not seeing that reaction. I'm not seeing the move. I'm not seeing any of it at all on the hourly. It is currently 9:20 almost. I'm going to pause the video one more time, and I'm going to unpause. Not in 10 minutes, but when, and only when, we've either entered the trade or 10:30 has come and passed. I want to see a move into a key level. I want to be able to, from that move, identify each of the confluences needed to enter a trade, and I want to have that trade executed on. If I cannot identify a move and the retrace after which, that will govern whether or not I take a trade, then by 10:30, because at that point a trade is no longer an option, I will not be looking for a trade any longer. At which point, my ultimate decision for today is I'm not going to be taking a trade. As much as I'd love to, I won't be, because there are no major moves at the moment. Either that or we have missed our move completely. So, that being the case, I'm going to pause the video again under the hope that 9:30 comes around, about 10 minutes after 9:30, we'll see a move big enough for us to really consider taking a trade from. Be right back. Okay, so it's now 10:30, right? Okay, it's 10:30, right? We're looking at this occur right now. See, it went up. Technically, this would be the key level hit because this is London session high that we're working with, right? From here, we're looking pretty much for the overarching thing. We're looking for a sweep of these collective highs throughout this. And what's got to happen is it's got to come up, cap out, break structure, and then from that we go down to the 1 minute for the inverse for value gap, and then watch it plummet. Hopefully we can get some profits with this. Again, we're looking for the reaction. So. Wow. That all just happened right then. Wow. Whew. I want to wait. I gotta wait. It's 10:01 right now. We got a couple more minutes to wait. So that's what I'm going to do. Figured I'd unpause and just let it unfold as I see it, the way I see it right now. I'm seeing a leg up. I see a break of structure. If not on this candle, definitely on this candle. Now we're looking for this candle to continue up and move back down. I'm going to pause the video and wait for the rest of everything to form. I'll be watching it like a hawk. And if I can't manage to find a valid key level hit, then I am going to patiently wait for, what was it, Thursday I said? No. Wednesday's FOMC, can't trade then. Thursday's a holiday, apparently, can't trade then. Friday is the only other day we can trade this week. It's an orange folder, and that's the thing. So, yeah. BRP. So, stuff. Oh. Oh. Oh, hot dog. I could do something here. Hot dog. This is actually prime time setup. Hello. It did a thing. Can I draw a rectangle? Give me a rectangle. Thank you. I'm going to put this in this so I can use it. Move that over a little bit. Boom. This. So from here down to here is what I'm looking at. To the wick. Boom. And then from here. From there to there. Good. Okay, so just so we're on the same page. Just so we're working with the same mode in mind, right? I don't even think I can count that. I think I can count this right here. I think this right here is a more accurate depiction of what's got to happen. So the strategy I learned from another YouTuber on the interwebs with the grain of salt that it can potentially fail, right? These two blocks take the bottom wick up to the top of the the last candle before the fall at the top of the highest candle, right? All the way down to the lowest candle, right? And it's actually inversed. I've actually did that backwards. I did it like it's supposed to be like this. Boom. Right? These ranges have to be respected. If this range is respected, it's going down. This range is respected, it's going up. And these can be treated like fair value gaps, where if it closes above this range, it is a disrespected fair value gap. Except they're not fair value gaps. This is entirely a completely different strategy altogether. I'm not entirely sure what it's called. I'm not even sure if this is going to work out the way I want it to. But I do know one thing without a shadow of a doubt. I am waiting patiently for this right here to occur. Technically, this is a key level hit because we passed a certain high. That high specifically that we've been waiting on for a minute now. It's finally been passed. Now that's the thing. What am I looking for? I'm waiting for an inverse fair value gap or a break of structure on the 5 minute. And just so we're on the same page, we have one fair value gap, we have two fair value gap, we have I can't count any of these, but we have a fair value gap right here. I'm waiting for this to go all the way down and back down. That is what I'm hoping would happen. Now, under the rules of strategy number 2, and this strategy is what I've learned so far. If the zone above, this right here is respected, right? Two things were just confirmed. One, it's not going to go higher. It's going to go lower. And two, the downtrend is solidified. Yes, we broke structure by sweeping all of the highs from before. However, and this is where the two conjoin really, because we had the sweep of the collective highs from the leg down, right? We got to see, am I unpaused? I am unpaused. Whew. We got to see the sweep occur, which means that the market makers have manipulated market in such a way to claim all of them to fuel their sell orders to push price in the opposite direction. Okay? You see what's happening here? You see what's going on, right? This leg up says we are, without question, about to move down. Now, there is a conflict that I'm seeing right now. There is a stark conflict. And it begins with this line right here. This line is the no-no line. You pass that line and you try and take a trade, you're more likely going to lose that trade. Or break even and earn nothing, which is not the point of taking a trade. The conflict is that line. We need to find a trade beforehand, whether it be an SMT divergence or a break structure or inverse fair value gap on the 5 minute. And then we have to identify immediately after that a fair value gap as a sign of continuation that, yes, our idea is right, that from this leg up, the reaction down is a valid one, right? Because we have to identify on this mode a break of structure or an inverse fair value gap from an uptrend, which means A, we're going down. B, on that second note on the continuation, right, we're having to identify a fair value gap, breaker block, order block, or for price to just come back with an equilibrium for us to take a trade. Equilibrium starts at the bottom of this and at the top of this, which means price has got to be like roughly in there, which by the time it hits this, we'll have achieved both an inverse fair value gap and for price to be in equilibrium. Okay? That's cool. That's understood. I understand that now. And then from there on the 1 minute, we have to find break of structure or fair value gap, inverse fair value gap, back up, because we need the retrace in order to enter and then back down. Stuff. Big stuff. Let's see what happens. Did I explain that thoroughly enough? If this zone's respected, it means we're going to go down. If this zone's respected, it seems we're going to go up. If we're in a valid downtrend, which this is honestly saying what it is, and the liquidity sweep looks valid to me, it collected all of the highs from before. The reaction should be market makers this was market makers manipulation to push price even lower than what it was before. I think on the 1 minute it'll break structure. What we are looking for from this is a fair value gap to form, and because it's in equilibrium, we can move past that, go to the 1 minute, and then look for a break of structure within this or potentially even within this. But we need to wait for this candle specifically to close and potentially the next and the next. We need this gap to be reversed, inverted, so that way we can continue with our lineup. Just to clarify and make sure we are looking for a break of structure, inverse fair value gap, or an SMT divergence saying price is going to go lower. The only real way to see that is on if I were to do this and go here. This says higher, and that's a little bit lower. NASDAQ is lagging behind. It would be the one we're looking at if we were to take a trade. I don't know. I don't know, Mr. Chief. I don't know. And it's got apparently all this time to move back down. This is the line of no-no. We're in the last 15 minutes of whether or not I'm going to take a trade today. Fingers crossed we can. If not, yeah. One moment. I got to do something right quick. It's crazy how much one fan could really change, like, the tone of a room. Because I want to look at this. How's your day been? Or how's it going? I'm just now realizing it's like midday for some people. By the time this is posted, it'll be like, yeah, it'll be afternoon. Won't be evening, but it will be afternoon. Gosh. I think we're going to get a break of structure before inverse fair value gap. It'll more than likely be on this candle here. From that break of structure, we'll be still on 5 minute looking for either a inverse fair value gap, or I'm sorry, a fair value gap, break block, order block, or for just price to be in equilibrium. After that, it'll be um, a break of structure or an inverse value gap on the 1 minute that's going to determine whether or not we have a trade. I am going to be very hesitant on entering as well. I think I've done a great job up to this point in identifying key levels and figuring out the market as it stands right now. I might have been wrong. Inverse value gap first. We need a closure below that dotted line right there. So, nope. I think that was a break of structure right there. It looks like it was. Poor buddy. Stuff. Stuffity stuff. Stuff. I seriously can't wait to make that. I'm debating on creating a little uh, character, I guess, just to experiment with it, just to see what I could do. I want to create it thinking, oh, hello. Thought we had a break of structure, but it appears not. If we did, I mean, okay, sure, that's a break of structure. The way it's moving now, though, it's starting to look like I am actually about to see a breaker block form. Quarter block, sweep, retrace, failed continuation, confluence. That price is going to go lower from, because again, we're looking for the retrace to occur. So breaker block there. Price is on the next candle, potentially going to move down into equilibrium. Is this even out? What is this? Almost. Still a fair value gap right there. From there, it would be, we go to the 1 minute, look for an inverse fair value gap or a break of structure to the upside, and from there it would continue on down. Going back to what I was saying earlier, though, I wanted to create a character just to see what it's like to have, not my face, but a character I can, like, have light up and fade out for when I'm active and when I'm not. Just to have a little fun with. I could even choose to edit it in, like, videos and stuff, so there's a little interactive of me down below, and I'm not having to sit there and consistently say, ooh, if you like the content, consider subscribing. I just hold up the sign for the little thing. Okay, so that looks like a breaker block to me. So we have break of structure, breaker block occur. If that is a valid sign of continuation, this candle right here is not going to close above it. For this to occur, we go to the 1 minute, we look for a break of structure, this right here, up above that. It's got to close, though. We need to see it close for it to be a valid break of structure. I think this is the make or break it candle. And at the same time, we're on the no-no line. I don't know. I don't know, comment section. I don't know. I don't know. And the no-no line has been crossed. We did not get a break of structure, and we have not gotten an inverse for value yet. I hope you guys enjoyed today's video. I am not going to take a trade because, one, we are all past the no-no line, and two, my confluence didn't form beforehand. In the event you think I could have been successful at this trade had I done a little bit more, my bias was price was going to go low for the day. I was looking for a short the entire time, and I think I did pretty well. It was the reaction off of this right here, this liquidity sweep, that I was hoping to get a decent profit off of, and I think I implemented during the time frame I needed to the secondary strategy I figured out. I learned from YouTube quite well. I think that actually was beneficial. This right here, I think this was very beneficial to me, just because it set a key level that I normally wouldn't set for myself, and from that I have my margin of error when it comes to when things are respected or disrespected, and it overall sets the range at which I can then identify the confluences, because it's within the liquidity sweep that I find the confluences per the TJR method, on really getting all the confluences lined up and executing that trade in the first place. Comment below what you think, if I can improve on this in any way. I know I can improve on it. There are plenty of other strategies out there that are, I'm assuming, I'm going to guess, a little better than TJR's method. I think, in my opinion, I'm working at this at a pace that I'm comfortable with, and because I'm comfortable with the way I'm working with it, I am setting myself up for success, but at the same time, I know I need to get skin in the game with a confidence befitting that of someone who has very little. Thank you for watching. If you like this content or find yourself on the comeback, consider subscribing. If you put that thumbs up button down below, please note that tells me you like the content. The subscription is completely free and tells you when I post these kinds of videos, and I stream Mondays, Wednesdays, and Fridays. You can check me out on Orbs Vault, or down below in the comment section, or description, not comment section, description, you'll see a Twitch link affiliated with Orbs Vault on YouTube. You just go there, it's the same thing, pretty much. You'll see the lives as they're being recorded and streamed on Twitch and YouTube alike. YouTube will host a variety of videos that will be the full-length recording of each and every single one of the streams I do. Typically we game Mondays and Fridays, and Wednesdays are my creation streams. 9 times out of 10, those VODs will be posted here on Org Plus, and if you're interested in the video game aspect of things, come check us out Monday and Friday. I stream from 2 to 4 on Mondays, and then I also stream from on Wednesdays 2 to 5, and then 2 to 7 on Fridays. I hope you guys enjoyed. I'll see y'all Friday, because Wednesday is FOMC, can't trade. Thursday is a USD bank holiday, can't trade. Friday is our last day this week that we can actively take a trade on, so I will see you guys then, okay? Okay. Bye-bye.